first things first, what is the stock market? It's a place where people exchange goods, except in this case, the good is a stock. A stock is basically a share or just partial ownership of a company. The main part about the stock market that gives people the chills is that stock prices change all the time based on how a company is doing or how they might be expected to do in the future. The whole idea is that the investor is hoping that the value of the company will go up in the future so they can sell it. Let's say I buy a share of a stock that's worth $5, and in the future the share is worth $10. And if I sell it when it's worth $10, then I get a $5 profit. This benefits me because of course I get money back on my investment, and this benefits the company because they get money from me that they can use for other business ventures. But then there's another way to make money on the stock market known as shorting. How it works is an investor is betting that a stock will lower in value, and basically the investor borrows that stock from a friend or just someone else, and then they sell to another person when the stock price is high. Then they're basically hoping that the stock price will go down in value, and they can buy that stock back and give it back to the person they borrowed from and hope to get some profit off of it. Let's say I borrow a share of GameStop from my friend and the stock right now is worth $100. I'll sell the stock to someone random on the market and I'll get $100 from them. So let's say the stock price goes down to $10. Then when it's worth $10, I buy it back from that person or whoever owns the stock at that point, and I pay them $10 and I give the stock back to the person who originally owned it. So in the end, the person who originally owned the stock, they have their stock back and I made a $90 profit.
So now let's discuss the recent controversy in the news. So Wall Street Bets is a Reddit community of investors that usually partake in risky investments. One of the members found that GameStop was a commonly shorted stock by many hedge funds. Hedge funds are big investment firms that make investments with billions of dollars, and they invest on behalf of their clients. Along with some good news that GameStop received, GameStop became a stock purchased by many people in the Wall Street Bets community. This led to the price of GameStop skyrocketing. All the hedge funds that bet against GameStop were a part of a short squeeze where they were forced to close their short positions to take their losses.
To add more information, all trades on the stock market are public information, and rich investors and hedge funds are more likely to have their trades seen by other investors. And in this case, Wall Street Bets found the trades of the hedge funds and basically used this information to buy large amounts of the stock. And this led to the stock's price skyrocketing and hedge funds having to buy back the stock at a higher price, which led to extreme losses.
So Robinhood, you can have it on your phone. It's an app, and it's basically a stock trading platform. It's known as being one of the most easiest trading platforms to use as it has zero trading fees for both stocks and cryptocurrency. Stock trading apps like Robinhood don't immediately give you ownership of a stock once you buy it on the app. Instead, the company executes a trade that takes 2 business days to settle the trade. During this 2-day lag, the company needs to have enough money to set aside as a collateral. So when people in the Reddit community bought GameStop, they were buying lots and lots of shares. Robinhood didn't have enough collateral on hand for those trades. Instead, they temporarily stopped people from buying the stock. This led to controversy surrounding Robinhood regulation of free market stock purchases.